The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Welcome, folks. You got Tom O'Brien imitating Larry Pesavento. It's a beautiful thing.
We'll do our best. That's a tough one.
Well, hold it. We can get this thing.
What do we get?
Feeling
That's
good.
That's right. There we go. Looking good. Billy Ray, feeling good.
Lewis. Totally, man. You gotta
Looking
love
good,
it.
Billy Ray, feeling good, Lewis.
Totally, man.
Even that music I love, man.
There's no doubt, man.
That's an awesome movie. And it's on right now a lot because it's a Christmas movie, you know.
I'm going to watch it again.
I've already seen it once. I mean, maybe it was last weekend or something. Some channel was running it. It'll be on plenty.
Yeah, no doubt. But we appreciate you growling and prowling with us out here, folks. It's going to be... no doubt a wild open. We have the futures down, S&Ps are down 16, the Nasdaq's off 39, and gold is trading down 780, silver's off 28 cents. We have the bond market going topside once again with volume, man. I mean, you know, next Wednesday is the Fed meeting, and these bonds want higher price, man. They're going higher right into the meeting, which is going to be wild. So the 10 years up 15 ticks, 126.29, and we bring it up. The 10 years getting close to its highs, okay?
That is wild.
It is.
Yeah.
30 years up a full point and 4 ticks, 156. King dollar's down $1.70. The overseas markets took a hit last night. You know, Asia wasn't that bad, really. You had, let's see, Singapore was off 0.6%. You had the Nikkei up 0.6. Europe, different ball game. Europe right now, we have the DAX down 1.6%. The CAT in France is down 1.3. You got the FTSE down 1.3. And our markets...
and oil is almost at $36 a barrel.
Oil... Well, I guess there's a lot of things that are culprit, but oil is the culprit. No,
yeah, it's just a big part. It's
huge.
Amusing watching it.
Huge. And if we pull this baby up, okay, let's pull this baby up right now and take a look at it because it looks that CLF6. So oil out here. Oh, look at that nasty bar. So
I hadn't even seen that bar yet either when I brought it up.
At let's see, what time is that? That's at 0500 this morning. Oil hit $36.13.
Yeah, 5:30 in the morning.
Right, and right now you're at 36.24.
Yeah.
That's
and it just dropped 20 cents in the span of that's a 10-minute bar.
Well, they heard you. They heard you talking, man.
They're quick.
So needless to say, folks, okay, this is going to be quite a market. Now, if we pull up the S&P, so watch, what we have here, folks, is this as a potential ABC structure on the way down. It's going to go after the B point. The real question is going to be is that do you get the volume for this ABC structure on the way down? If we take a look at the SPY, this is what you have. The SPY closed yesterday. Well, yeah, let's go through it, how this is set up. So the SPY came off the highs. The high that we're talking about, the first high out here, the A point on this would be on the 2nd of December. The 2nd of December, we were trading at 211. We did 108 million shares. You make the first lunge down, which was on the 3rd. The B point, however, would be the lows of 2 days ago. The low of 2 days ago, you had 204.18. You had 162 million shares. So we went down on Wednesday with 162 million shares. You go up on yesterday, and it didn't hold price with 116. That sets up a 200 A to B equals C to D. Now, for an ABC structure, to have the probability higher, you have to bust the B point with volume, and that'd be 162 million. Well, we're going to bust the B point. You know, the B point, 204.18, this is going to jump the creek, basically. It's going to basically gap under it. You know, so we'll see whether we get the juice underneath it. I suspect we are going to get the juice. The reason that, you know, the way the market had traded Wednesday and Thursday was so fast.
Yes.
The give-ups were just so fast that I was like, man, this is pretty intense. So what where my own head goes with this is that we're on a Friday, the Fed speaking Wednesday. If we stay low coming into like 3 o'clock this afternoon, you know, then that selling could accelerate. People would say, you know, do I really want to be in?
Yeah.
And it's not just the weekend. What it is that it seems that
time's running out before the Fed meeting.
And you know.
And just speaking so fundamentally, right, I've been talking about maybe refinancing. Well, I locked in a rate over for 90 days. So that'll go in a few, and I did that like last week. Yeah. But that's because I think risk-reward-wise, and I'm really not even risking anything. You know, I'm going to get my place appraised. I'm going to do all that stuff.
No, but you get a reward.
Yeah, right. Yeah. And what's my risk, you know?
Yeah, zero.
Yeah. And now's the time to do it because I really...
Well, your risk is that you don't do it now, the Fed does go up, and it not only goes up once. The history of the Fed has been when you go up, they continue to go up.
Right.
Everyone, not everyone, but most analysts out there saying, no, that's not going to happen this time. Well, guess what? It's happened every single time, you know, if we go back the last 50 years.
Right.
So it's like, you know, so that's the risk. That's all of our risk.
It is. Yeah.
You know, and why take it?
Right. And that's really what's the risk of taking it was more of, you know, and there's not.
You know, it's wild. So check this out. You know, this is pretty cool, folks, okay? In the context we've been talking about that someone that's Tommy's age, even a little bit older really, have never seen rates go up.
Yeah.
I remember when we first would get a mortgage, it was 14%. But I also remember this. I was saying, wow, you know, of course I had no money then, okay? Not even close. I mean, I'd make up maybe $100 a week or something. Do you know what I mean? Or $150 a week.
Sure.
And interest was paying 14%. You could get 12% on a CD.
Yeah.
Right? You could get 14% on a bond. A 30-year bond.
Right. I mean, I had talked about that I had savings bonds, and they were coming from 1980.
Right. So that was the peak.
They were big coupons.
You had the peak.
And I kept them over 30 years.
Right.
So
you had the peak.
Big money.
It was awesome. You had the peak. So you know.
Yeah.
So I was always saying that, oh, I wish I had some money because I couldn't believe that you could actually make money without doing anything.
I'm sure.
You know what I mean?
I know.
You know, so now it brings me to right here.
Environment.
Yeah, then you can make money without doing it, like big money too.
Big money.
So now it's going to be interesting 10 years from now that we're all looking at each other saying, oh, could you imagine I could get a mortgage at 4%?
Right.
Because that's
I hope so, because that'll mean the economy's rocking.
Yeah,
it has to.
And also, though, it means that you're going to be saving a fortune.
Right.
Huge money.
Right.
Huge money. So
that's only if the economy's rocking, though.
Yeah, that's right.
So that's where you have to keep, you know, it won't be like, oh man, I could have at one time, because in theory, there should be plenty of money out there to be made on that money if
that's right. That's right. And that would mean that inflation has to get going too.
Right.
Yeah.
Right.
I mean, things have to be worth more money. Right. You know, theoretically worth more money. The dollar's buying
all those
less.
Variables have to work together in some capacity like that.
So it's going to be. Hey, let's go look at that gold market. It's Friday. They're whacking gold.
And of course, you want them to go up. Once you have, you know, I'll have a nice 30-year mortgage at 4%. The rates can go up, and then hopefully I'll have some cash where I can be the one getting the 14%, right? Like you're talking.
No, I don't want them to go up. I don't want them to go up like that.
Them to go up, yeah.
Not like that. The aspect of like going to
because you got more mortgages to take out.
I have more mortgages. You know,
you're parlaying. You're taking advantage of those rates.
5% wouldn't be bad. You know what I mean?
Well, yeah, of course. Right.
Well, what would happen? Two different things would end up happening. Is that if in fact inflation went like that, well then what would happen, folks, is this: is that forget getting sleep. Because you just better, you know, stay awake about 22 hours a day.
Sounds good.
Move, and do that for 2 or 3 years, and then you can pack it in.
Sounds good.
You know? No, because you have to stay ahead of inflation. You know what I mean? And you can do that very quickly. And it's the beginning of it where you can make the big bread.
Yeah, I'm sure.
Gold out here this morning, they're going to whack this thing. Let's see what they're doing here. I think it's still all right. When I say I think it's still all right, I'm looking at that number, 1063, because what we did, okay. The danger, of course, is that we have a Friday. You know, Friday in the gold market is always dangerous. Thus far, it's all right. You only have 71,000 contracts, and we're going, I think, going against 224,000, 209,000. The 1057, though, that's got to hold. And, you know, I suspect we're 1063, went to 1061. They're going to go. It's going to go after it, you know.
Yeah.
And that's with the dollar still weak. Oh, if you want to see something, folks, you know, yesterday we were talking about it. Wait till you see this. This is intense, and I
know where you're going. We were just looking at it before the show.
There's no doubt, man. If you want to see something, I'm going to bring you up in South Africa right now. First, I bring up Harmony Gold. Look at this. This is insane. You know it.
And look at how it's come back too. It went all the way up to 2,000. It's back down under 1,600.
Yeah,
that's some volatility.
And it started at 1360. So what we're doing here, folks, is that we're looking at Harmony Gold trading. Let's see, is it still opened? Doesn't look like it's moving. I can. So it's already closed. Okay. It might be. Well, I'll know that in a few more minutes.
Yeah.
I'll check it out. It started out at 1,360 Rand dollars, ran up to 1,989 Rand dollars. That's 50% move, right? Just about seven.
Is.
Yeah.
It is exactly. Exactly. Yeah.
And if I go, when we take a look at the Rand, wait till you see this, man. This is intense. The Rand is trading at 1588 to 1. And yesterday, Tom, what happened? I see it. This is so cool. I have it right here. We had a call in the afternoon show, and I did the numbers on, if you want to see how intense this is, folks, and how much money they can pull down, I'm going to bring up the gold contract, and I'm going to bring it up in Rand dollars.
Okay.
It's at all-time highs. So watch this. This is amazing. Okay, so look at this, man.
Oh boy, look at those last 2 days.
It's unbelievable. So right now,
they look like outliers on that.
Exactly. At the Rand dollar, you're at 16. You hit 17,020.
Yeah. You can just call it 17,000.
Yeah, so I'll call it 17,000. Yesterday it was 16,608. So at that level,
yesterday it was like 16.4, but yeah, close.
At that level, now when I show you this, is a mind blow up. At that level, the South African miners, right, are making 2,256 Rand dollars more than they ever made, even watch this, when gold was at highs.
Sure.
That's how intense it is.
Can you pull that chart back?
I can. And this is September of 2011.
Okay. What's the previous high?
Was in U.S. dollars.
Okay.
Okay. See, because what happens is this: is that they get paid in. Well, their expenses are in Rand dollars, right? They get paid in U.S. dollars.
Yes.
So they're making more money now with gold at 1065.
Why don't we pull up the chart?
Yeah, no.
To look at those dates. It'll help me and everyone else, I'm sure.
Then they were making.
I mean, we're just going back 2 months, but we're talking about 2011.
Watch this. Here, let me. I'm going to do 2 different things.
Perfect. We're going to have some time over the break to set it up.
That's a beautiful thing. You stay right there, folks. Tommy and I are coming right back. Down. Well, oh, man, they just hit this again. Oh, man, I don't even want to tell you what this number is, folks.
NASDAQ down over 1% right now.
Go ahead. S&Ps are down 20.
That's the one that sticks out to me. Totally.
Yeah, S&Ps are down 24. NASDAQ's down 54. Big numbers. That means we're going to open 250 down on the Dow Industrials, folks. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, ThinkOrSwim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Looking good, Billy Ray.
Feeling good, Lewis.
That's a beautiful thing, man. You gotta love Larry, right?
It's awesome, man.
I love his show, man. I'm telling you, it's just absolutely amazing. The future's out here this morning, folks. Bottom line is that it's definitely going to break the B point. The real key is, are we going to get the juice on the move? I suspect we're going to. I mean, this is pretty intense. The S&Ps are down 25. You get the NASDAQ off 56. That puts it, so just to get some context here, what I expect you're going to see is this. It's not only just taking out the last two swing points. What you'll go after today is that we're going to go after the swing of the November 16th area, which is pretty intense.
When you say go after it, high, low, just
the
in
low,
the bar, the
17,210. 210.
We're going to be really close to that in the open.
We are.
Yeah.
No, that's what it's trying to go after. Yeah. And if, let's see, so on the 16th, let's go see what the volume is on the 16th of November. 16th of November we did, oh, that's easy. Oh my God. We only did 865 million there. This thing, yeah, that'd be nothing. The number to watch is 1 billion though. 1 billion, because that's you want to take the largest number. Yep. Exactly. If we take a look at the NASDAQ composite, we put the composite up. It's going to be hard for the composite to get down that far, but that's what it's going to try to do. That's down at 4908. Man, that'd be a move. Holy cow. Well, I don't know if the composite's going to get there. That's a monster move.
Sorry, say what was the number again?
4908. Yeah. So that's what? That's 98. That'd have to be down 143.
Yeah. That's a big number.
That's a big number.
That would be a big day.
That would be a monster day.
Let's hope it's not that big of a day.
Yeah. No, it's pretty intense, man. And of course, what's going to get intriguing here. Oh, yeah, let's go back to that gold for a second so we can show you that gold.
Yeah.
The gold in rand terms, right? So picture this, which is just amazing, folks. Okay, so gold is right now at 1,065, and if you go take a look at it,
1,065 U.S. dollars.
U.S. dollars, yes.
I know.
And the high was 1,920, and the thing that's amazing is that in rand dollars now, Harmony would be making much more, and this is the kicker, folks.
And just it's just when I pulled it up, you showed me, and we went over it during the break. I mean, here it is, and then just as easily, right?
Right. That's sick.
It is such a cool chart. It is.
It's amazing.
And you can see it was almost above it for some time.
I know.
And this is like really leaping over it.
Leaping over
now.
it.
I mean, it's just in the last few days, this whole area from 2011.
Yep. It's quite a consolidation too.
Right. That's what.
Now the thing that's going to be amazing is the South African miners, folks, have the most expensive gold. It costs them the most to mine it. But so their expenses ratio is very high.
Okay.
But at these levels, they're making money hand over fist. And here's the kicker. The kicker is the South African miners mine millions of ounces. This is not, you're not, a lot of gold companies, 100,000 ounces is a lot,
Sure.
but not in the context of a South African miner. So now you start multiplying millions times that. It's like, man, oh man, pretty amazing. Dollar index, oh, there she goes. Okay, so the dollar, this is going to be wild, man, just figuring this whole thing out, because the dollar's going south again. The dollar, bounced yesterday with light volume. Looks like we're going to also go after, the dollar wants to go after this lower swing point. Well, more than likely, too. I bet DXH5. 1 second. We're transferring contracts, too, I bet. No, I'm on 6. That's right. Oh, my God. We're in 2016, man. That blows my mind. It does.
It does, I know.
6. Okay, so, yeah, this is the contract we want. Okay, so it's down 414 ticks. We got 13,000 contracts right now. It's pressing. We'll see where that baby wants to go, but it is pressing right now with some juice behind the move. And it's
be interesting as this market opens.
It seems like it's always everyone always wants to get out at the same time. This is unusual though when you're down 250 at the open.
Well, just like I've been talking about it a lot in terms of I wanted to refinance before the rates started to go up. Yeah. And that's when I made the call. I made the call a week ago.
Right.
Because the acceleration could begin, and so that's a real testament. That's a real testament to people selling.
Exactly.
Yeah.
And we haven't even talked about it yet. It's the end of the year. And the market's been up for 6 years.
Yeah.
It's like people say, hey, I want to take my money now. I want to go do something.
Some tax selling if you have losses.
Big time.
Make sense.
This is the time.
Right.
Because when you do take a look at that S&P, folks, okay, you can see, you can make the case that they didn't want to sell last year because you didn't know whether it was going to go up another 5-10%.
Right.
But we have a flat market this year. You stay right there, folks. Tommy and I are coming right back for the open. Dow, the S&Ps are off 23. NASDAQ futures are off 55. We're going to be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzamento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by ThinkOrSwim. For more information, just click the ThinkOrSwim banner on the front page of TFNN.com.
Welcome back, folks. Tom O'Brien, Tommy O'Brien. We got our man, Mr. John Logan, with us, growling and prowling out here. What's going on, brother?
Hey, man. God, I'm tired. These markets are driving me nuts here. How about you?
Well, I've been eating a lot of nuts. I get a lot of energy, man. You know.
Even during the break, he's going to the keyboard. I'm like, man, you are excited.
you know, it's terrible. I said that Tommy said to me. He says. It's down to, I says, yeah, it's only down 200.
Yeah,
man.
It's like 180 or something, or 90 when the Dow opened.
You know.
What'd you say?
I saw it's only down 200, right?
Oh, you said, that's nothing.
That's nothing,
yeah.
Right.
So that's over a 1% open by 9:30.
I gotta give
it's
you.
never enough.
Exactly. I was just laughing.
Listen to this. I gotta give you the context of this, okay?
Okay.
So yesterday or the day before, someone came over to us, right?
Oh, we're going full context.
Why not? Right? Why not?
Why not?
Someone came over to us and they want to advertise, right? And I said to Tommy, I says, oh, man, he's a gloom and doomer, man. I said, I don't know if, you know, and he looks at me, he says, what do you think you are? I said, I'm not a gloom and doomer.
I said, what do you think's going on here? Or something like that, you know? I agree. All right, you know, I agree. But I was like, let's just live in reality, you know. So but it's a good reality. It's a good reality today, you know. That's for if you're whatever. Hey, go ahead.
He's an optimistic gloom and doomer. He's optimistic.
You know, I think that's a perfect way to put things. I do.
Perception is a crazy thing, right?
Man,
it really is, man.
It is.
Oh man, I'm telling you.
I tell you what, where's the targets here on this thing?
Hey, tell us. Give us the targets, man. Let's get that TAS profile up, man.
Well, I talked this morning a little bit about, you know, we've been in a 6-year bull trend. I mean, don't lose sight of that is the course that we've been on, and it hasn't really mitigated from that course a lot. So keeping that in mind, I mean, you know, everybody, as soon as these things start showing hints of breakdowns, I mean, I have been a victim of this too. It's like, all right, here we go. You know, let's make it all back now. And you know, you got to keep in mind when we get to these support areas.
Yes.
You got to pay attention to them, and you know, you got to kind of almost be willing to sell lower prices sometimes because they have confirmed that we've gotten below certain technical levels that it's okay to get. You know, really start looking at this in a different light.
No, listen, man. What that point you just made, and folks, you got to pay attention. It's absolutely huge because what does happen, what I've seen happens is this, and it's a flip of the switch in your own head. That when you know, I mean, we trade futures a lot. You do too. You know what I mean? So what happens is in that arena, folks, it just happens that you think that, you know, oh my God, you know, I was shot 20 S&Ps ago. Now I'm throwing more shots on. It's like, oh my God. But the key there, folks, is if you do that, is then you put your stop only 2 or 3 points above it. Like if I'm day trading, that's what I do. Do you know what I mean? Because it's like you never know when the whole trap door is just opening. You know?
I know. And you know, again, the big thing for me is, you know, in the old days, it's like, okay, before we really started taking what Stoudemire's work was and, you know, causing a derivative around it, which made it very rules-based for me. This was back in early 2000. You know, it was always difficult, you know, how do you orient stops any other way than monetary stops? And you know, the thing I love about this and the scanner that we have is it's just full-on, very defined inflection points that I know I can use that as a roadmap to orient stops around and therefore, you know, play that defense that always has to be played.
Right.
And that's you know, that's the big thing for me. And John from Philadelphia was pointing out this morning something, you know, so important is, you know, it's stuff that Larry talks about, you talk about, but it's all about managing the risk, you know, and you can have the best, a lot of the automated systems that are out there that are very profitable systems might only be right 30 to 40% of the time. I mean, it's about make 3 and lose 1, make 3 and lose 1, or scenarios like that.
There's no doubt, and you know, folks, this, you know, I'm sure there's a lot of people that listen to us that, you know, don't trade too, you know, sitting in their car right now, and what I've found is this, is that your lifetime, you're going to make a lot of money. It just depends on how much money you lose making it. Sure. And that's on everything. So always keep that in mind, you know, and that's the way it goes. If you know, it's just how it goes, man. You know, so when I go into something now, I always go into saying, how much can I lose? How much can I lose? Because, you know,
so the different thing too, people look at the lost opportunity cost. Oh, I could have made that. I could have made this. You know, that's a loss, but that's a theoretical loss too. And if you always worry about a real loss of protecting what you actually can lose,
totally.
Sometimes people confuse that, and I remember getting my own head around that. And it's like an opportunity cost that you lose is not the same thing as actually losing value, and that's important to keep in mind because you're gonna miss a lot of opportunities if you're protecting yourself correctly.
Right.
That's the perfect way.
And you gotta have a better head.
Right. Oh, and you're gonna make plenty of money. Right. But that's just
because you have your money.
You're keeping your risk in check, and so you're gonna miss opportunities. But guess what? You're missing opportunities because you would have risked a lot more and you would have lost a lot more that goes along with it.
Totally.
Yeah.
Totally.
And this goes all the way up the line. I mean, like there's a friend of mine that's his brother is literally a billionaire, and he owns a Ferrari dealership in Newport Beach over in California, La Jolla.
Yeah, the other places don't.
That's a good spot for a high-end dealership. Yeah,
and they're just going out the door right now. But that's one of his things he does. But he's a billionaire. I've sat and talked to him for a while, and he goes, John, look, he goes, you know, people, and you're talking about risk reward and keeping the powder dry and all that. He's like, look, I got people coming to me with deals all the time. I'm wealthy, and that's just the way it goes. And when people come to me with these deals, I know if I get 5 deals in and I spend $5 million on each deal, I'm happy if one of them works because I'm going to take a little. I know what my downside is, like you're talking about, Tommy.
Right. Yeah.
Here's my $5 million downside. Here's my $5 million downside. But this one, I'm going to make $50 million on.
Yeah. Right.
So it's something that's turn and rinse the same way type scenario, all the way up into massive amounts of money. So and it's the same thing. Playing online poker or doing all kinds
trading.
Of different
trading.
Right.
Anytime you have risk out there on the table, whether it's a mortgage, you know what I mean? A mortgage. Same deal. We're just talking about my mortgage. Well, guess what? That's a risk reward analysis I'm doing in my head where I'm like, guess what? I'm just going to lock one in right now because what's my risk? Nothing. Barely. Why would you not if you had any rate above right now?
And it's great when we talk about risk reward. Our man, Mr. Kevin Hincks from TD Ameritrade, that does a show each Monday and Tuesday right here at noontime.
We got a big party going on
We
today.
got him on the line. Kevin Hincks, what's going on?
How we doing, guys? Happy Friday.
Happy Friday, man.
From a balmy Chicago.
Oh, and hey, Kevin, say hi to John Logan. We got John Logan on. He's in North Carolina. He kicks us off 8 o'clock in the morning. We got you in Chicago. You guys are in the pits. Well, so we got some action out here, man.
We do.
How you doing, guys?
Great,
man.
John, good to see you again.
Yeah, man. I interviewed Kevin when I did your show the other Monday. Tom.
Oh, that's awesome, man. That's awesome.
We had a good time. I thought I enjoyed that.
Yeah, it was great.
Yeah.
So we were just talking to risk reward, Kevin, and we know that when you set up these strategies, at swim lessons, it's just awesome because it's not putting it on red or putting it on green. You know what I'm saying?
Right.
And you need some risk parameters out here today, don't you?
Well, it's one of those things. If you're a trader today, it's one of those great days. You look, it's 8:35 or 9:35 your time. The market's down 220.
Yes.
Now what?
Right?
Yeah.
Right?
Now what? Yeah.
It opened up down 220 in a gap. The S&P is down 22 or 23. Now what are you going to do?
Right.
Now you got to make a call one way or another.
Yeah. Right. And what is intriguing, folks? What does happen is that when markets gap down or gap up, that takes a lot of energy out of the market.
It's a big move. Totally.
It's a big move. So it is going to be intriguing on a Friday, of course.
With everything looming next week, it's like that's not you're not in a vacuum mode. It's Friday. It's like you're on Friday before the Fed's about to raise rate for the first time in forever.
Yeah, so. That's Wednesday, right? Wednesday's the day I think that the
December 16th.
Yeah.
Right?
Yeah. Yes.
Right.
Wednesday.
Right.
Yep.
Yeah, a hard thing to do a lot of times in situations like this is to do nothing. I mean, a lot of times you want to, when these types of reactions happens, you have to sit there and not bang the keys.
Yeah.
And kind of let other people, get in the trenches and figure out exactly, let them spend the money a lot of times to figure out, where this thing where you're going to get an edge again. And, so that's something really important to keep in mind.
Patience is always key, man. And
there's no doubt. There's no doubt. Now Kevin, the last 2 days, I mean, particularly on Wednesday, that sell-off was. You talk about fast and furious, huh?
Yeah, they're just, there's not a lot of people. Remember, just like an earnings event, just like anything, next Wednesday is going to be a big market event.
Yeah.
And you got VIX has now got a bid underneath it.
Yeah.
And you've got people just unwilling to make I was talking to J.J. Kinahan just about this exact topic. I'm like, it looks like they're almost pre-trading this number.
Yeah. Right.
Exactly. Yeah.
But the question now is, They pretty much have this baked in, right?
Yeah.
The market's kind of baking in a move, and the market doesn't like to be surprised. But we're going to find out if Janet Yellen is watching these markets or not.
I know,
right?
Man. That's going to be
because they are not acting healthily.
I
think her rhetoric, the possibility of her rhetoric is what they're trading off of now. Because, like you said, it's a foregone conclusion, probably the 25. But now what she's,
what's coming with it, right?
Yeah, with the market selling off now, everybody's like, oh my God, it's gonna. She's going to get dovish as hell, or excuse me, heck again.
Right, John, and I'll tell you what, John, I made the comment on our show the other day, and I've been saying it a couple times. It seems to be a foregone conclusion that they're going to raise. But I think the comments afterward are going to be so dovish. Yeah. They're going to trip over themselves to try to take some of the teeth out of this interest rate rise.
Right. I would totally agree. Yeah. They wish they didn't have to raise them almost, so that But
exactly.
Yeah. Well, they backed themselves into a corner.
That's what
now.
So they can't. I completely agree. Yeah. It's almost like you can't just keep them. You have to lower them. But
the massive quarter point one-time rate.
Exactly. That's what it's going to be.
Guys, as we have this conversation, look at the yield on the 10-year.
I know, man.
Tell me what
we started the show off with it. We did. It's wild.
Yeah.
Crazy. Yeah, I was saying buy the breakouts above 126, 23, 24, and I it's crazy. I mean, like.
You're getting some mixed messages here from the market.
It's huge. So, folks, what Kevin's talking about, we've already done 558,000 contracts on the 10-year, and it's approaching its last swing high. Now, the high of the 10-year is only 129.18 or 126.29. You got to remember, there's only 32 ticks in a point. So we're almost at 127. It's amazing.
And you're talking about 3.5 days from a rate increase, and that's what the 10-year's doing.
Seriously, deviance, crazy. Right? You love that word, and that is deviance, man.
That is deviance. There's no doubt, man. Absolutely no doubt. So
keep your powder dry. Is the message for this market.
So, Kevin, do you have a schedule of what you guys are going to be up to for swim lessons next week already? Do you guys plan that in the beginning of the week?
We're actually, Scott, Connor, and I are talking about that right now as we speak. We're in the planning stages, and we're gonna. We like to keep them as close to topical as we can. So we're going to use the high volatility environment to give you directional plays where you can finance a directional play and do them for the least amount of capital.
Nice. That sounds cool.
Nice. Every trade starts out with some type of opinion, right?
Yes.
So if you have an opinion, if you're bullish or you're bearish, we can show you a way to finance a directional trade using another trade.
Yeah. And that's so cool because I think a lot of people, they have their opinion and they have their trading methodology and they're comfortable with that. But what you need to know is how do you then take that methodology and make the most profitable trade you can make in the market, knowing what you want. And that's the tough part that you really need to get educated on, that these guys do. Scott, Kevin, Cindy do such an awesome job at it.
And it's huge because one of the keys, folks, inside the option market is you wake up in the morning and the decay is working on your side.
No matter where you are. No, it's depending. Right.
It's a big deal.
It is. There's a lot of variables.
And that's where those strategies come in that are pretty amazing, man. There's no, and it's,
Kevin, do you guys mix a lot of underlyings with options on some of the swim lessons that you do, or is it basically just?
We have a portfolio that we work with, and we show different trades. Like we're just coming out of earnings season, so we probably put on 25 or 30 trades through earnings. And we show them what we do when they work. We show what they do when they don't work. Like case in point. We probably had winners on 22 of 24, but like Macy's went through our strike. So what we did, we turned it into we did a whole lesson on here's what you do when it doesn't work. Right, and we called it trade repair.
Nice.
And we turned Macy's into a covered call strategy because our long-term view didn't didn't change on Macy's, right? And where it went to. So we don't just give up on it. If you still have a bullish opinion on Macy's, and we looked at Disney from a quarter ago, right? Okay. Disney sold off hard into a quarter, and if you stayed with some type of strategy, it rallied all the way back. So that's what we did at Macy's, and we used it as a teaching moment.
That is awesome. And folks, don't forget, as you're over at TFNN, Kevin, every Monday, Tuesday, noontime, you can get them. You can go test drive the ThinkOrSwim platform. I use it every day, whether I'm trading equities, options, futures, or commodities. And as we talk commodities, folks, gold just went from down 6 to up 2, and the dollar's getting destroyed. So
and the Dow's down 256
And the Dow's down 256. Hey, Kevin, any chance you can stay with us a few more minutes?
No problem.
Awesome, man. You stay right there, folks, okay? We got Kevin Hincks in Chicago, John Logan in North Carolina, Tom and Tommy O'Brien in Clearwater, and we want to hear from you. Our phone number is 877-927-6648. Coming right back, folks.
biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. We have our man, Mr. Kevin Hincks, John Logan, and of course, Dow right now getting whacked. It's down 270 rather. S&Ps are off 26. Quite a market out here, guys.
And as we went to break, Tom, oil went through 36 like without a lot of fanfare.
Ooh, that's heavy, man. I mean, yeah. You know what's amazing is that you actually, it seems that oil is going to like lay out here for a while. It's a different downdraft than in 2008 and 2009. That was just a straight move down versus this has been legging down for a bit. You know what I mean?
What in the heck is going to bring Amazon down then? if the market.
You know what's funny? Talk about Amazon. What did I just say to you? I got something in my email. I'm looking at email real quick over the break, and I'm getting things where if you use this credit card on Amazon, you save this, you save that. And I was just talking about they all want to have your credit card.
So is American
Amex is going to give me $15 if I spend $60 with my Amex on Amazon. So I'll use my Amex for one of my presents, and they want you. But you want your credit card on Amazon, man? That's where I need some money. Like
this thing is still acting so strong. Even this morning, it's really not even coming off terribly large. It's just. It's incredible.
Nothing's wrong when you run the world.
The only thing that can change the picture on Amazon is every other retailer catching up.
Yeah, I completely agree.
Getting in their game.
Yeah, they just dominate, man.
Right now, they're reinventing it.
They are. And they make things so easy in terms of even TFNN. I look at what they do, and I want to do what they do in terms of customer experience, availability, using on the web, everything. It's so great.
It's so easy.
But you haven't raised a ton of money, I don't think, and are building up your personal wealth empire like Bezos did. While the company makes nothing.
I know that's for sure. And when I tell people that aren't in the market, do you have any idea that Amazon just doesn't even make money? If you're not in the market, you don't know their stock. That is a third world. That makes sense.
They get a cash flow though.
They do.
That blew my nephew's mind. I told you on Thanksgiving.
I tell people
we were playing a game. He was like, "Nah, they must make 15-20% margins." So I was like, "No, no." Yeah. So Jeff Bezos is the smartest guy ever in the history of the planet.
That'd be a tough one to argue against, man.
Yeah, so.
All right.
Hey, listen, guys, thank you so much. You have a great weekend, safe weekend. Of course, John and Kevin, John, 8 o'clock in the morning, Monday morning. Kevin, at noontime. And remember, folks, you can get everything right on your cell phone. If you're listening in your car on the West Coast right now, TFNN.mobi. Have a great trading day and a safe day, folks.
Have a great day, guys.
Thanks, guys.
Okay, thanks, man. Bye-bye.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.